cause for cheer and fear in financials on account of the same thing. Now, the same thing I'm talking about is the fact that all financial institutions are either prepping for, announcing, firming up, or have completed a recent fundraise. The next point, which is also tying a lot of these financials together, is that all of them have a capital adequacy ratio which is well above the regular limits. So that means that based on what the RBI says and what the chief regulators say, there's no need for any of these institutions to raise money right now. In fact, a lot of them are sitting on excess liquidity because they haven't been loaning money out over the last 3 to 4 months on account of the perception of fear and stress in the economy. So when you have sufficiently high capital adequacy in the range of 15, 16, 17%, you don't have any compulsion to lend out aggressively right now because credit demand has come off and you're being more cautious. Why are you raising so much money? Now, what's further alarming to investors is, why are you raising money at valuations which are considerably lower than what were there just 2-3 months ago? Now, there is a lot of speculation, but once ETNOW has been talking to a lot of bankers, the conclusion we've arrived at is that there's two sides to the story. On one side, yes, it is true. The times we live in are uncertain. Revenues for a lot of businesses have fallen off and they might not come back. There's a lot of stress in the economy. And as a result of that, the RBI has come out over the weekend and said that we could see a huge spike in NPAs to much larger percentages than what we're usually used to. So this is what is on the negative side, pushing banks to say, okay, I need to protect myself right now. I'm going to raise some additional money. So even if there is any such issue, I can weather the storm. I'll be able to provide for it. And I won't have to lay the brakes on my growth at the same time in case there's any opportunity to do so. However, on the flip side, which is a lot more encouraging, banks are saying, okay, how often is it that foreign institutions, domestic institutions are all willing to literally spray money at Indian financial institutions? It's no joke. Kotak's just completed a share sale plus $1 billion QIP. Yesterday, IndusInd is looking at a $500 million raise nearly, with around 1/4 of that coming from the promoter family themselves. We've had Axis and ICICI which have announced $1 billion plus raises, but we're still waiting to hear who those investors will be and what price that will be done at. Perhaps that's why those counters are under a little more pressure as of late. What's also further encouraging is that these fear levels on the negative side for why banks are raising have also come off a little bit because the moratorium percentages have all come down. So all banks, IndusInd started at 50, they're down to 16. ICICI started at 30, they're down to 17. HDFC, Axis and Kotak are all down to less than 10% and they're all hovering around 9%. So two sides to the story, one opportunity, one crisis. Investors need to take their call which side of the fence they want to be on.